Hello and welcome to Trading the Trend. My name is James Boyd. The question we ask ourselves every Thursday is what trends are you riding or not riding? And we'll talk about that here in just a moment. We welcome all of you here today. We got Elena, Laura, Eric, Austin, Fayez, and many others. Welcome to all. We have Brent Moores in the chat, a fellow instructor, myself, James Boyd. Teach this on a weekly basis. This is live, but it's also recorded as well. I'll share with you that link in which you can find that in just a moment. Many of you maybe have never attended a session from Schwab, a webcast. This is one of many webcasts that we actually do throughout the week, and I'll show you some resources that if I was in your shoes, I would want to know. So stay tuned. Make sure you have a pad of paper and a pen, and also just a way to kind of have, I'm going to share the links with you, and when I send those to you, bookmark those so you can actually find those again quickly. Now, just real quick, as we talk about trading the trend, the class that we normally teach would be like, obviously stocks, but also options based. Today, I'm going to probably make 80% stocks, 20% options, or 90-10. So that way everyone can get something from today's material that we discuss. I also want to be aware of your questions. So I'm going to be looking at questions as we go. So make sure if you have those, Brent will be watching those in the chat. You'll see his initials, BM, and myself. I'll be looking at those as well. Let's hop right in. Now, remember that when we talk about stocks, stocks actually have risk, okay? Options, if we bring that up, and we're going to do it on a very small section, remember that carries a high level of risk, not suitable for all investors. The information provided here is for general informational purposes only. When we talk about technical analysis, there's other approaches, including fundamental analysis. Macro analysis, we'll be looking at, let's say, GDP, consumer confidence. I think one of the analysis that we've been trying to really watch is intermarket analysis, how different asset classes are working together and some of the relationships. I think that's very important because in the market that we actually have, there's moving parts, okay? And it's not just about stocks, okay? Now, also remember when we show examples, we will be on the Paper Money software application, and I'll show you that in just a sec. It's also known as Think or Swim, and you can download that to your computer and or right on your mobile device. Investing involves risk, including loss of principal. Now, also remember when we talk about, and I won't get into short options here today, remember if you do options, consider the option Greeks and know what they measure. And also remember that coming up, you really want to make sure you write this down, okay? Schwab.com/events. So we do webcasts, about almost 40 a week, okay, live. And we also have actually in-person events. And you're going to see that we're going to be in Scottsdale this weekend at the Phoenician. The first day we talk about technical analysis. The second day we actually talk about option strategies, how those can complement each other by using stocks and options. So now, by the way, how much are they? A nice round number of 0. You're not investing any capital or paying to go per se. You're actually investing time. So you could actually just go to schwab.com/events and meet many investors like yourself. Now, also, I saw in the chat, many of you actually from Chicago. And we have the AOS, which is the Advanced Option Workshop on the 21st and the 22nd. That's advanced options, okay? And also Detroit, following what we're really doing in Scottsdale, where the first day is technical analysis, second day option strategies. Now, do you have to be living in one of those areas to go to those events? No, you could travel there if you wanted to. If you had family, friends, work, whatever, you could go, okay? So just go to schwab.com/events and you'll see that listing different events all through this next year, okay? So make sure you kind of write that down. That's a nice win for you right off the bat. Now, also remember, I want to talk about kind of some of the trends we're seeing in the market. Now, we know when we talk about trends, it's when we say up, we're saying bullish trends, sideways, neutral, downtrend, we're saying bearish trends. It's important to be familiar with different types of trends. That way, if the market does go sideways or down, do you have a strategy in which you're trying to take advantage in that type of trend? Now, a lot of times the market tends to go up, but sometimes we have different types of trends, neutral or down. Now, we'll talk about the time frames that we use. Shorter term, days to weeks. Intermediate, weeks to months. and longer term, months to years, or you could say quarters to years. If you wouldn't mind in the chat, tell me kind of what time frame you like to invest. Is it shorter term? Is it intermediate? Or is it longer term? Now, James, could you have a blend? Sure. You asked me and said, James, what do you like? Kind of what's your preference? Doesn't mean it's right for everyone, but kind of more shorter term to intermediate. Okay. So there's not a right for everyone. It's just what do you like to do? Now, we'll also look at some examples on the charts as well. Now, let me go ahead and bring up just real quick. If you go to youtube.com, okay, and what you're going to now notice is if you go to youtube.com, now, by the way, if you have a mobile device, okay, you got a mobile device, you have YouTube downloaded on your phone, the app, you could just go to this page, Trader Talks Schwab Coaching, okay? And what this is our live stream right on YouTube. Now, last night I was with a friend of mine. He says, I'm looking to start to invest. I pulled it up right on my phone. I just pulled it up on my phone, said, hey, let's pull up YouTube, typed in Trader Talk Schwab Coaching, and I said, these are all free videos. He goes, I had no clue. I said, I feel like a lot of people sometimes don't know that it's there, okay? It's right there. So make sure if you have not subscribed yet, do so. That way you can see all of our content. Now, when I refresh this, what you're going to notice is it's going to show the class that's playing right now. How much is it to subscribe? 0, okay? The hardest thing you have to do is just go to YouTube, type in Trader Talk Schwab Coaching Webcast, and smash that subscribe button. Now, the biggest actually thing also is let's kind of go just real quick the market here. Let's talk about this. Now, what I'm going to show to you right now is this is going to be the Thinkorswim platform, okay? Let me just kind of set your eyes as far as what we're actually looking at. So I am on the charts tab, okay? And our goal that we want to do right now is we want to look at the markets, like the indexes. We want to look at some of the sectors and kind of see some of the things we're seeing out there in terms of new potential examples and maybe current examples as well. So when you follow our classes, they're not just looking at kind of what's happening in the market, but we're doing examples of stock trades or option trades and then trading those. That way you can see kind of what's happening. Now, what I'm going to do is I'm going to pull up, let's say, the DJX first, okay? Now, as you would expect, what I'm bringing up, if you said I have very limited understanding in terms of market in general, these are things that if you listen to the radio, we hear this all the time, okay? So when I look at the Dow Jones right now, DJX, we see the Dow Jones is down 515, or in other words, 1.1%. We could also see that right there, okay? Now, if we look at, let's say, which one's down the most, the NASDAQ is down 2.4%, the S&P is down 1.8%, and the Russell's down 1.7%. Now, the chart that I'm showing you, and this is what we call the left sidebar, I'm just going to close this for just a second. Just click on that right there, okay? Now, let me share this chart with you, because if I was you, I'd be like, man, I want that chart, okay? And what I'm going to do is let me just share this with you, okay? Share this chart. There it is. And I'll tell you how to put that on in just a moment. Now, in the chat, okay, now don't worry, we're coming to what we see on the chart and also at the bottom of the chart. Now, what you're now going to see on this, and we are looking at the Dow Jones Industrial Average, we're looking at two different moving averages. What does it tell us? Well, now, if this is your first time here, it's, wow, geez, kind of awesome. Now, you're going to notice that they're not the same duration of time. So the moving average, the one that's closer to the current price, that's the 10-period moving average. Remember this, and it's not going to change, okay? That 10-period moving average is momentum. If the price is above that line, the moving average line, that's telling us there's momentum. There's more buyers than sellers at that point. Now flip that. If all of a sudden we went over here to the right-hand side and we actually see that the price is below the moving average, the 10-period moving average, it tells us we have bearish momentum. What does that mean? Well, it means that currently we have more sellers than buyers. Now wait, why is that? Why is that we have more sellers than buyers? Well, if people maybe don't want to buy or they're waiting to buy, you have an absence of buyers and the price tends to go lower to find out where people are willing to buy. Okay. Now, in the world of technical analysis, so we look at price. Okay. We look at trend. Okay. We look at support and resistance. And if I went back and said, where do we see support? Think of support as just being like a vertical line on the chart, a horizontal line on the chart. And if we were to kind of say, where do we see a potential horizontal support, kind of sitting right at it. Now, when I first got started, I got started investing, 25 years ago in Bowling Green, Kentucky. And the gentleman said to me, well, if there's one idea that I would give you is to buy low and sell high, with a Southern accent. Now, when he said that, I thought that I was the only one that actually knew what that meant or heard of it, okay? Which that turned out not to be true. Other people had heard of it. Now, what you're going to notice is if we look at where we are, some people might say, look, we're in the area where buyers might start to buy. Now, remember we talked about right now this red line, right? If the price is below the red line, there's more sellers than buyers. Now, what is this second line? Well, that second line that I'm pointing to right here, that's your 20-period moving average. What does that tell us? How does that relate to technical analysis? Well, if that red line is turned down, the trend is down. It's not really up for discretion. If that moving average is down, rule number one, the trend is down, okay? In that shorter term intermediate, the trend is down, but I want the market to go up. The market doesn't care what I want, okay? The market doesn't really care what you want either. The market is a collection of buyers and sellers. And the faster we can realize that, probably the better it could potentially be. So when we look at that 20-period moving average, down, bearish, more sellers than buyers. And when you look at the shorter term, it's red. So we see a negative trend and we see negative momentum. Now, when we see that the price is kind of in that situation still, some people might say, look, cash is king. Cash is a position, okay? And if the investor doesn't have an entry to get in, okay, they might say, look, I'm waiting for a setup to get in. Now that's okay. You need to understand that. Sometimes you don't have a bullish setup. The key word is yet, okay? Now, I want to kind of just make sure, let me send this out to you again, okay? And so I just sent the link to share this chart with you. Now, how do you put this on? Okay, so now this is assuming you have the Thinkorswim platform. If we go to the setup at the top right, setup, and then what you're now going to see is open shared item. Okay, so very top right, setup, open shared item. Now remember, this is being recorded, okay? Setup, open shared item, and then just copy and paste in what I just sent to you, okay? Now, Mayor says, how do you make these colors? Well, you don't have to make them because, Mayor, I'm just sharing it with you. If you can copy and paste, you're in business. Now, if you click on this, now what you're going to see is when I do this, what do I do next? Well, let's preview this. Let's see what it looks like. Preview. And you get a little chart, and you'll kind of see that this chart looks like the one that's behind me. Exactly. Okay? Now, what do I do now? I'm going to import this. And so imagine this is on your side. I'm importing this chart to you. And if I do that, import, now what you see is a little chart comes up like this. And how do you maximize it? Well, just click on the maximize, okay? Now, when I do this, and I'm going to imagine that my name is Mayor, okay? Thank you, Mayor, for being a contestant. I'm going to go up to the very top right where it says Style, and I'm going to go down to where it says Save Style. So it's just saving the chart. Now, why do I want to save this chart? Well, on this chart, it has the moving averages. It also has like a MACD, which many technicians like to use, and a stochastics, which we have been talking about daily this week, which we're coming to, okay? So I just want to make sure we're all on the same page so that way we can all enjoy it, okay? So we go to Style, okay? Save Style. All right, now if I do that, I'm just going to type my name, Mayor, okay? Now if I do that, I'll just click Save. Where did it go? This is always the question, right? So go back to Style, load Style, And now what you're going to notice is there's Mare right there. So it's saved to your platform and really shows some timing as well. Now, so when we look at, let's say, the Dow Jones, and you know kind of where I come from, one of the things we've been talking about this last week is looking for a bullish divergence. Just real quickly on the Dow, we're going to move forward. We've kind of been tracking this divergence. We've said, look, the market's kind of in that area where if it's going to bounce, it's probably in that area. Now, a divergence is when the price is going down, but the oscillator, the MACD, is going the opposite direction. We still have that. Second, we've talked about Monday, Tuesday, and Wednesday, because I teach daily. What you're now going to notice is we've been in this oversold area on the stochastics. I'm going to ask everyone here a question. Have we reversed out of that area or not yet? Just take a yes or no. Okay? Well, the answer is we haven't reversed out of that area, that oversold region. So if we looked at the chart and kind of going back to the first thing that we taught, do we have any color change on the moving averages so far? And the answer is definitively no. Okay? No. If we're looking at the Dow. Now, if I pulled up, let's say, well, what about the SPX? If I pulled up the SPX right there in the box, right there, type in SPX. The nice thing about this moving average is you're going to notice that if one starts to change, they're not going to probably turn at the same time because one's using a duration of 10 days and the other one's using a duration of 20 days. Now, how many of you have ever said to yourself, looking back, it looks so easy? That we've had a red shading on the SPX for the last 10 days. And why was it so hard for it to get through my mind that there is more sellers than buyers? So the red shading is just confirming what the moving averages and price are showing you. The red shading is really showing you selling pressure. The green shading is really showing bullish buyers or bullish pressure. Okay? Buyers outpacing the sellers and pushing the price up here. Now, just real quick, any questions? So when we talk about the Dow and the S&P, we see that we're in the area of the support, but we cannot definitively say that we see turnarounds yet. The only thing that we would actually say that we're starting to see is long lower shadows. If you look at the index or a product that tries to track the index, you will see high volume. Usually bottoms, okay, have long lower shadows or tails on the candlesticks and a lot of volume. And we have had pretty high volume, okay? Now, by the way, welcome all of you new viewers. I want to make sure you're aware of something, okay? So a lot of you have we've been together for years, and you guys are the regular attendees, and we always appreciate it. We're investing, okay, friends, for crying out loud. Now, the other thing is many of you say, geez, it's the first time I've been here. Well, you could attend this on a daily basis, weekly basis, okay? The great thing about being a webcast or a workshop, you meet other like-minded investors like yourself, okay? Now, what I want to do just real quick is I want to also see if there's any questions, okay? Yeah, that's correct. Brown Buffalo says the style is not specific to the Dow. That's correct. It doesn't matter if we're looking at an index. It doesn't matter if we're looking at a sector or an individual stock. It's just a technical analysis style, okay? Now, what I want to do is I want to go back just briefly and let's go to just real quick to the list of sectors for just a moment. And actually, I do think we deserve, and Thea mentioned the other day, actually I should say today, something that we want to continue to watch because it's been consistent with what we've talked about. So there's two things that we want to watch. So when you look at the Market Watch tab, think about the Market Watch as you're watching the market. You can think of the Market Watch like a list of stocks or whatever you made the list of. And here we have the indexes that we've been talking about, right? SPX, Dow, NASDAQ, etc. Well, the two at the top, the VIX, which we'll quickly show, and also that one right there, the second row, what you're now going to notice is that's the 6J, That is, I just want to point this out because Thea's done a great job staying on top of that. This is one where we want to watch. If that one continues to go up that I'm pointing to, you might kind of see some more volatility. Okay, I won't pull up that chart, but keep an eye on that. Theta, good job. Okay, so let's pull up this chart, VIX, for just a moment. Okay, so when we look at the VIX, if this chart is going up, where do stocks tend to go? Now, if someone were to ask me what is this chart, it's really, I like to view it as it's the blood pressure of market participants. Okay, so if this chart is going up, people are becoming more fearful. People are becoming maybe more worried. Okay, people are expecting maybe the fluctuation in the market to be more wide or more volatile. And the opposite of what we really saw on the SPX, where this is not a red shading, this is a green shading. Now remember, when this is going up, that actually means that probably more stocks than not are probably going down. Okay? Now, does it go down forever? No, it doesn't go down forever. Okay? But the biggest actually thing is what you're going to notice is occasionally there can be some spikes, okay, in terms of volatility. Okay? Now you got to remember something is we've had spikes before, right? Where the volatility went up. There's a lot of fear or negative news where the volatility spikes, bad news, bad price action, etc. And then what happens is when the volatility goes up, prices are down near support areas. So it's kind of good and bad because when the volatility goes up, stocks drop. And if you own the stocks, well, you're losing. You have unrealized losses or you lock in losses. But sometimes if you're trying to get in, you kind of like to see the volatility go up so prices go down, right? I mean, don't you like to buy it maybe a little cheaper price? Okay. Now, so let's kind of talk about this, okay? Now, the biggest actually thing is when we actually take a look at some of the individual sectors, and I'm now going to just kind of move, this is a list that I made, and I just want to kind of talk about what we're kind of seeing right now. So when you kind of get to the bottom, the end of the sell-off, you'll normally notice that there's nowhere to hide. Everything starts to have like more of a correlation to each other, a high correlation that all things look, well, sold off. And what you're going to notice on this chart before we look at a first example is when we look at staples, real estate, healthcare, basic materials, communication sector, and so on, they are all stocks, or excuse me, sectors where they're actually having a bad trend, okay? So when we say a bad trend, we're really saying trend number one. Trend number one means the prices are below both moving averages. Now, don't worry, we just saw that, okay? So if we have trend number one, it's without even looking at the chart. You could verify, though. When we see trend number one, what is that telling us? It means the prices are below both moving averages. We could also see right here in these columns where we have also two columns of red. Those red boxes are telling us that the moving averages are red, and the numbers in the boxes are counting the number of days in which the moving averages have been red, okay? Now these columns right here, these are known as scripts. Another word you could say for scripts is a way to scan or search or monitor, okay? So I'll share those more in just a sec. But, usually when we get down near like bottoms, usually there's no place to hide. Now, I'll just quickly speak to a couple areas and let me kind of ask you this question. What areas are going up? Are there any areas going up? Well, if we were looking at a couple areas that were going up, we do see that kind of gold is actually still getting a little push, okay? We see the shorter term moving average going from red to green there, starting to get a crossover. Many investors like to see that. Now remember, when we start to see this move back to the upside, red, 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 more sellers than buyers, more sellers than buyers, more sellers than buyers. All of a sudden that line becomes green there. And if that line starts to become green, we're starting to kind of see the bulls come back in the market. And all of a sudden, if we get the moving average crossover, which we're trying to do here today, gold trying to get a little move back up. Now, the other place that we saw this was not just gold. We're also seeing a little push on that precious metal of hi-ho silver. If you actually look at silver, silver is also getting a little push. Now, I'm showing you these to kind of show how the turns look. When they stop going down and they start going up. Red line goes from red to green. There it is. Then all of a sudden we get a crossover. There it is. And then what you'll also notice is that 20-period moving average goes green as well. So you're going to kind of notice that that shorter term moving average gives us a heads up. Okay? Hey, the trend could be changing. The crossover is really just showing more of a confirmation, and that 20-period moving average really showing more and more confirmation. Now, does that guarantee that it's going to go up? No. It could go down the very next day. It's just showing at that moment in time. And the other one that we need to bring up is copper, okay? Copper that we're actually, when we take a look at this, a big push on copper yesterday with a little push here. Now, why do we bring these up? Gold, silver, and copper. Well, there's companies that are gold related or silver related, or a group of stocks could be related to these. They could also be related to copper as well. Okay. Now, what I want to do is I want to kind of take a look at, just real quick, a couple stocks that are kind of showing some potential strength. Now, sometimes when things go down, you got to also kind of be thinking about what is maybe holding up better than other things. Now, the question you might have is, well, how on earth would you know? Well, we could go back to MarketWatch for just a second. Go back to MarketWatch, okay? And we're going to go to quotes. Now, when we go to MarketWatch and quotes, it's just going to bring up the list that we saw before. Now, notice when you go to MarketWatch and quotes, we got this drop down right there. That drop down right there is going to show our personal list or like a public list. Personal list is a list that you made. The public list is one that we all have as well. We're going to go down to the public list, and we're going to go down to the Dow Jones Industrial Average. Why? Well, one thing we want to kind of see is in this sell-off, what stocks have really had a shallower pullback. Well, one of the scripts that we actually use quite a bit is the weak return, okay? So that weak return, what you're now going to notice is which stocks have pulled back, let's say, the least from the very high, or I should say in the last week. So if we click on that, I'll share that with you. Merck has pulled back. It hasn't really pulled back. It's up. Amgen is up 3.4%. You're going to see UNH is up. TRV is up for the week. PG is still up. Johnson & Johnson is still up, and there is Mickey D. Okay. Now, if we take a look at Mickey D, okay, and if you said, James, could I have that as well? Remember, I'm a sharing person, okay? If I right-click on that heading and go to Edit Formula, I'm just going to share this with you, and that's just a simple one. And I'll share it where you can see all these, okay? Now, I'm glad you brought that up. Deere as well. We're going to come to that. Now, if you take a look at this, I'm going to bring up Mickey D's, okay? Mickey D's is one that's actually still positive for the week, positive for the month. When we look at, let's say, the trend that we have, it's trend 3. That just means the price is above both moving averages. Remember, if you're a bullish investor, the investor is trying to look for stocks that are in that condition. Now, if we pull this up, so, by the way, when we look at this and say, can you clarify what's the purpose of the week, the 1 month, and the percent? The purpose of this, the week percent, is to look for bull flags, prices that are surging in the shorter term, also known as pulls. If the price surges in the shorter term, that might be a stock that might have a greater probability of making a higher low and trending. Obviously, if we talk about 1 month, now we're talking about 21 days of trading, where it could kind of show us a little bit more of actual, has it been trending? And then obviously year to date becomes more legit when we're looking at something where, hey, if we're 90 days in or 180 days in, what's the year-to-date returns on these? And you could just simply right-click on the column heading. So I want to go back to just real quick. Let me send this to you, and I just sent it to you. Let me do it one more time, okay? So now, by the way, when you put these on, if I click on the 1 month percent, can it statistically rank those? Yeah, just click on them, okay? Ascending or descending. Same thing with year-to-date returns and so on, okay? Simple way to find them. So if we said what stocks in the Dow are kind of showing a greater chance of having uptrends, AMG, Coke, Verizon, Johnson & Johnson. I mean, that's ultimately the proof of trend. Did they go up or down? And did they go up or down is really based on percentage. If we actually said, hey, what probably has a downtrend? Okay, it's the ones that are at the bottom of the list or negative returns. Simplest way to see trends, okay? Did they go up or down statistically? Now, what I'm going to do is, let's go back to the setup just for a second. So if you took what I sent to you, the week percent, and you went to setup, open shared item, same thing that we saw before, same. And then we went to setup, open shared item. And all we're going to do is just copy and paste. I'm telling you, now in college, you can't copy and paste because you labels as a cheater. Well, here in the real world, no, we want you to copy and paste. We want you to, okay? I'm going to copy and paste again, preview. And now what we're going to do is I'm going to label this, Wiley, thank you. You're going to be the contestant. I'm going to call this the Wiley week percent, okay? Wiley's a good friend of ours, so we're just going to kind of put Wiley there. Wiley, you're famous, okay? Now what we're going to see is I'm going to import that. So that really wasn't that bad. Copy and paste it in, preview, name it, okay? And then just import it. Now, when you go back to that market watch for just a moment, okay, and you said, well, can you customize the things that you want to see on the chart and look for? Yeah, sure. Now, let's go back. And so how would we customize that? So right-click anywhere on the headings, right-click. So we're on the market watch, quotes. And what I'm going to do before we go back to Mickey D's is we're going to right-click and we're going to customize. What are we customizing? Well, we're going to customize the headings. So what do you like to look for? Okay? What do you like to look for technically? Well, if you ask me and say, James, what do you like to look for? You're looking at it, okay? I'm looking for statistical returns, 1 week, 1 month, year to date. Some people like to look for implied volatility with technicals right there. What type of trend do we have? Relative strength, okay? Bounces, breakouts. Where are the moving averages? Moving average crossovers, bull flags, and breakouts. So this is like on one dash showing many of the things that a bullish technician or bearish would probably be wanting to look for on just one page. Okay? You're welcome. Okay? You're welcome. Many of us worked on this for years. And so now you just come to a class and you're like, man, it's right here. Okay? Now I'll show you where you can grab that. So let's right click on the heading. Let's go to customize. And what you're now going to see is, remember we labeled this as Wiley. So I could take Wiley, just type in Wiley, what we called it, and there's Wiley week percent. If I want Wiley week percent, okay, I just add that. And what it does is it goes to the list on the right-hand side, and that now becomes a column heading, okay? So that's not too bad, okay? So the first thing to kind of take away is, if you want to kind of way to make a routine in your investing of like things that you're watching, scripts are a way to do that. Remember when we talk about scripts, it's not guaranteed for timing or accuracy. You want to have an understanding of what it's trying to show and that you can verify it and confirm it by looking at the chart to confirm. But why do people use them? Because it's trying to be a time saver. That's why, okay? Now, let's go back to Mickey D for just a second, okay? Now, if we looked at this chart, what you're now going to notice is if I back this chart off down the bottom right here, got a plus and negative magnifying glass, just like we would see anywhere else. I'm going to kind of zoom in a little bit. Now, when we talk about technical analysis, we're looking for stocks that have an upward trend to them, okay? So when we say that, if I were to back this chart off, we're looking for something maybe it's gone from the lower left to the upper right. Well, this started off here, and it's slightly higher than where it was, let's say, last year or the beginning of the year. Now, if you zoom in on this chart, if I were to take a look at this, where would you say the support level is? Where would you say the support level is? Well, this support level, if we kind of said, if I had to have a horizontal line, that horizontal line is probably right about 303, okay? And what you're now going to notice is that's where some investors might try to set a stop. Now, you have to understand something, that if an investor buys stocks when the volatility is higher, the expectation would be that there's probably a better chance of the stock stomping out, okay, or getting triggered out. And what I'm going to do is I'm going to try to set a stop a little lower, just in case. And what we're also going to do on top of that is just kind of, for example, try to be very careful on position sizing, which we're going to see in just a moment. So now when we look at the moving averages, do we have an entry signal yet? I'll just take a yes or no. Do you see any green? Okay, I don't either. Now what we do see is a little support level. We've got 303, about 300-ish, 303 more, but we don't see any of those moving averages green keyword is yet. Now, the one thing that I said yesterday, when all of a sudden when stocks when we have stocks starting to bounce back to the upside, all of a sudden stocks will surge to the upside sometimes, and the investor might be nervous to get in. Well, one of the most common types of orders that an investor uses in this type of current market of volatility is a buy stop order. Let's explain. What I'm going to do is I'm going to right click on the chart. Wherever we right click on the chart, that's where we're saying, look, if it gets to that level, I'm going to try to get in. Why? Because maybe the investor thinks it can go up higher. Now, this is so counter to how some people think about it. Most of us are retail people. I mean, we're just fair. I mean, it's just what we are, right? And what I mean by that is we always like to buy cheaper. But in the world of investing, we don't necessarily always want something perhaps cheaper. We want something that maybe is trending and could go higher, okay? Now we're gonna right click on the chart, gives us a menu, go to buy custom and with OCO bracket, okay? Now what I'm gonna do in this case is down below, we actually have stock, buy. There's the number of shares and it's a stock position. So anything in green, it means we're buying, okay? Now, what you're now going to notice is different orders, okay? If we said market order, it's going to try to buy it at the market. It's probably going to fill as soon as possible, okay? If we said limit order, that's saying, look, there's a limit of what I want to buy it for. And last but not least, if we said stop, limit, this is actually saying, look, buy it if it gets above a certain price, but I want there to be a cap or a limit of what I'm willing to buy the stock for, okay? We're going to use that. Now, we've done this twice this week. This will be, let's practice this one more time because this is going to be your homework assignment. So we're going to say, look, we're going to say if this stock gets to that 311, let's just say 312 for easiness, 312. If a stock gets to that price or higher, buy the stock. Where's 312 on the chart? It's right there. Now, if the stock goes up, what color of the moving average lines do you think we're going to have? Probably going to have green ones, okay? That's probably when the investor is going to try to get in. Now, this order is set to go that if it goes to that price, 312 or higher, it's going to try to buy the shares. Now, this price right above, this is the limit of what you're trying to buy the stock for. There's a ceiling, okay? Now, what I'm going to do here is let's put in a number, 315, okay? So it's saying, look, you have to go to 312 or higher to have this order valid, but it cannot buy any higher than 315, okay? Now, on this type of order where you're waiting to see if it can push to the upside, we're going to go to GTC, good till canceled. Okay. Now, what I'm going to do is, for time's sake, and just remember this day order, okay, that's how it's defaulted, GTC, good till canceled. Okay. Now, we always like to look at the stop first. If you said, James, I'm going to set my stop below that $300.67, typed it in the calculator, less, let's say 2%, it's going to give us a stop loss of $394.65. So I just took that $300.67 times 0.98, and you'll see that there. It's going to give us a stop loss of $294.65. Now, if I go back and type this in, $294.65, dated GTC, that's the good till canceled. Now, for time's sake, I'm just going to go back and kind of say, look, where do we think maybe this stock might try to go? Now, if we were to kind of draw this, let's kind of put a price target for time's sake. Let's say we said, look, if it goes up to 340, sell that stock up into that area of potential resistance. This is probably the most commonly used order type. It's an OCO order. One cancels other. Either it goes to the target or it goes down to the stop. Okay. Now I want to kind of show you some things in closing here that I want to make sure that you have. Okay. So this is going to be our trade on Mickey D's, and we're going to go ahead and send that. But one thing I want to make sure that, for example, that you also have a quick reminder that this is not a one-off class. So as you got an email to say, hey, you could attend today, okay? Don't think this is a one-off. I'm going to show you both places and how you can find us. So remember what I said before. If you went to, let's say, YouTube, okay? You went to YouTube, and you just typed in, for example, Trader Talks Schwab Coaching right in the search bar, it's going to get you to this page. And if you have not subscribed yet, in the middle of that page, when you do that, it will say subscribe. Smash it. That way you can actually have access to all of our content, and it's just right even on your mobile device or your computer, etc. Now, second thing I want to really make sure that you're aware of, if you were on schwab.com, where would you actually find us? Well, right at the very top, without even logging in, it will say learn. And if we go to where it says learn, you're now going to see on the right-hand side, it's going to say Schwab Coaching. Now, very important here, okay? If I said, hey, Schwab Coaching, I'm going to click on that right there. And if you click on that, it's going to take us to this page. Now, once we get to this page, live webcast and virtual workshops. If I click on live webcast, this is now going to show us a calendar. And it's going to show the material that's taught and at what times. Let me send this out to you, and this is one you want to bookmark for sure, okay? Now, here we are on March 6th. If I click on more events, this is showing the calendar of what we're covering today, the topics and who is covering them. If you said, hey, what's going on tomorrow? If you said, James, I have actually an interest in ETFs, and you didn't cover that here today, well, tomorrow, I'll talk about ETFs tomorrow morning, okay? So if you said, I have a certain interest on maybe certain types of products or certain types of levels of learning where you feel like you are or who is teaching them, it's what you want, okay? Go get it. Now, last thing but not least, right at the very top, if we scroll back, if you said, well, where could I actually see those in-person events? I want to see if you have one in an area nearby. Well, if you go to in-person events, and you could scroll down and see all the other areas that we're going to be in throughout the year. Dallas, Texas, okay? Denver. Now, I don't want to do this as a sales pitch because it's not. These rooms, the walls are not infinite, okay? There's a set number of seating that they actually have per the fire codes, and so they do fill up, okay? So, but typically, to have a couple hundred people show up to those, we love to see you at those events. So hopefully you actually saw today as a Schwab client that, wow, you didn't know that we had these things called webcasts. Second, I didn't know they were live and recorded. Third, I actually didn't know that I could go to in-person events and meet other people like myself in my area. So we invite you to actually attend our sessions, okay, on the webcast virtual workshop, and in-person events. Now, I'm out of my time. These sessions are 45 minutes, and boy, sure do they go by fast, okay? Now, remember with what we discussed, it was done for example illustrative purposes only. Remember that you can download that Thinkorswim and practice what we talked about in a paper money format, and feel free to do that. Do not feel like I have to learn this in a real money account. Nope. You can download paper money and practice. And then as you feel more confident, you could say, might I consider this perhaps in my own account or real? Okay. Now stay tuned for our next webcast coming up right at the top of the hour. We'll have another session, and thank you, Brent, and thanks to all of you actually here today as we talk about trading the trends and also sharing of some of those tools and how to evaluate what type of trend do we have and momentum. So with that said, also remember that you can follow Brent and myself on X. There's my handle. If you said, and Brent, feel free to put yours in the chat as well. If you said, hey, James, where can I actually see the other scripts? Go to that handle right there and you'll see all the ones that I actually showed you here today as well. I want to wish you a great day, and we welcome you to the Schwab Coaching webcast. Stay tuned for our next webcast coming up next. Take care. Bye-bye.